So we are now at the current stage of the Bitcoin. We see 68,578 now, the current price. And how good this trading system I have been mentioning in my last video of today. So this is this video of today, the last one. Day trading strategy displays Bitcoin bull trap or also bear trap for both cases. So as day traders, if you are bullish and bearish, you can be also bullish in a bearish market, you can be bearish in a bullish market. And I have been explaining the whole strategy. Good. Gotcha. بیا اینجا بیا دیگه نکن دیگه. The setups I was providing, we see now here that the price rejected the last entry, the last POC was here. Now the EMAs are breaking down here. In the meantime, I have been adding two more indicators. So a little bit bigger one, but that's for me, okay? I don't want you to trade that because it's a little bit harder, more patience. So I'm making trading very hard to myself. And in backtesting, I'm not, for example, backtesting those periods the market is trending, right? Let's say, for example, this period of the market. Because every 100%, every trading system is showing you positive results and good performance in this period of the market. If the market is trending, nearly every trading system is making profit, right? I am backtesting the system only 90% of time on periods where I have lost in the past money and probably also in the future, and also over 90% of traders are losing money, for example, in these periods of the markets, right? So we lose the most profits, we give the profits back, the gains back. In a trending phase, every system is making profit. So if you're backtesting your trading system, always to find is important to find period where you have lost money, right? And make your trading system fit for that. So, and we see here now the market is rejecting these harder or bigger EMAs I have added already. And I have also added two more features to this trading system, my own custom based and programmed indicators. And in the meantime, now this indicator has been red, is becoming green, and we have to see that in the meantime the hourly 200 EMA has been green. That's the high, and that's the low plotted 200 EMA based on hourly time frame, so the market is still above. And now if you want to take a short, for example, we need to find out if the market is going to break that level, and if this indicator is becoming red, then it would mean that the short-term bullish run from here to here, or to here, or to here, has been a fake out and just a gap fill, right? If the market now starts to consolidate above it, meaning that the bears are accepting this price of the bulls, and they let them a little bit to distribute their bullish positions, meaning that they are waiting for tomorrow's data. Tomorrow again, non-farm payroll, very, very important data. Keep eye on that at 8:30 New York time. It's very important. The logic behind it is that in the meantime, right? So we had in other time periods this bearish move. The bears sit here and the bulls went here. For example, they took profit, they went long here, they took profit here, or even here they went long, they took profit, right? So, and the bears instead, because they are waiting for the data coming out tomorrow, non-farm payroll, now they are taking some profits here. And on the same time, the bulls who've been taking losses here, they try to use this or to push up a little bit this bullish move, first of all, to compensate their losses they have been taking in the meanwhile during the last days and weeks. And on the other side, they try to find out a way where they become sellers, meaning that the bears try or let the bulls come upper, the upper the better, because then they can sell the prices higher, and the bulls try to compensate their losses to get higher, to become sellers, right? So I'm not talking about retail traders, I'm talking about really big guys, right? For example, also companies who are now in margin call, like SMCI and so on. They need to sell bitcoins to compensate their margin call losses, right? And they are doing that. Not only them, also other companies. SMCI is now as an example. Michael Sarah. On the other side, we have been many fundamental signals today that the possibility that Fed will raise the interest, will cut the interest rates, the possibility is going down. We have a very high number of job cuts, and now everybody is looking on non-farm payroll. If the non-farm payroll is around expectations or better than that, that of course boosts up the US dollar and also the yields, treasuries, and that will put NASDAQ down and Dow Jones, S&P, RTY, gold will go down, Bitcoin will go down, for example, and many other assets, nearly every asset that is trading against the US dollar. So this is the fundamental side, right? And therefore, of course, it's possible that we go to the higher region. I have said it also many times in my previous videos, for example, to this level around 69,700 to 70,100, even to go towards 71,000 to 73,000. And the explanation for that is very, very simple. And we see it again. This is the current day high of today. So it's no way a rally. Yes, it is a rally of today, exactly. If you say this is a rally of today's trend, you are absolutely right. I am with you bulls. I agree with you in every point you say. It's a rally of today, right? But we see here where the last step of the bearish trend started, and we see this is very, very important era, 69,700 to around 70K. First of all, they will need to go here. If they go here, the better, because I'm waiting for them. I wait them until they go even higher to 71,250 to 71,500, even higher. Why? Because then these EMAs will also move higher, right? These are the big EMAs. So let's say the market makes this move, right? These EMAs are going higher, the market comes down, and we get this price. Now today, for example, I could sell the market also additionally here. But why should I, before I have any solid confirmation of that, right? It's not just confirmed. I wait also that the hourly 200 rises upside again, and then if the market is coming back, making a pullback, then I know for sure now I can add to my shorts. I have already upside of 73,200 something, and also above 70,200, right? And as all those positions still, I have trailing the stops to protect them well, so are in profit, and also parts of the profit is protected well. So I am trading for a bigger horizon of the market to go down to around 50k, 42k. It has not to be. Why? Because as traders, we should be aware of our own wishful feelings, right, and thoughts. I wish that the BTC goes down to 50, of course, but this is a wish I have. This is a hope I have. It has not to be. Who is always right? I am not right. You are not right. We traders are not right. The only that matters and is right is the price and the market. The market is always right. So I'm trading with the market, right? And the market currently tells me, David Brasco, do not take the short, because maybe I come here and then I will trap you. And if you follow your rules, then you will exactly know where I will trap you. For example, here, right? The market comes even down here, breaking the EMAs, but my indicator is green, and it says, dude, you have invested so much time in your trading strategy. Why are you not respecting your rules, your own rules you put every day? And if you don't respect your own rules, how can you expect me to respect you? And that's exactly true, yeah? So an additional indicator, you are very welcome. And I have done my own one, but you can find plenty of very good indicators also in TradingView. Is for example, to find the divergences like RSI is doing. I have done my own. This is RSI trend indicator. This is the short time, and we see now the short time, both short times are becoming green. But how can we see that? We see here that the long term at the beginning of the bullish trend of today has turned green, and now it's losing much more of momentum, is becoming red, right? So these are some more additional. You can add also to this trading system I mentioned. If you like it, you can then copy it once again, look the video before this one I did today, and you can, for example, add another features to that, super trend, your entry signals. Even so, you just use the EMAs. You can, for example, very nicely use trend lines, right? So you see here the market comes down with the trend lines, right? And you can then add positions here. Then we are, for example, here, right? So important is here we had a good, for example, with trend lines, a good entry. Here we had a good entry, adding position. No, this one was wrong. Why? Look again, because these EMAs are red, right? Even there, if the market breaks up and going down, as long as the EMAs are red, right? It means be careful with that entry. Let the market take a rest and show you, let the color change, right? So because this is the trading rule, right? We see here now very strong divergence, RSI signal buying, but this one is red. We see that this one is red. We see now in the mid-market the other indicator is red. So we are at the high of the day, and now we are looking now, first of all, if the market is going to close the at the current level. If so, we need to wait the open of the market at 1 o'clock and 24 a.m. right after the midnight New York time. It's the beginning of new day cycle for Bitcoin. So the first price is traded there is very important. If, let's say, the market closes here, right, exactly at this price, 68,625, and then the day goes long. This is the last trading price, closing day. The last price traded in the day is closing price, and then the market, right, like let's see here, and then the market opens below that, then you know, oh, the market started, instead, if the bears were really strong, they would open below, above the closing price of today. Okay, if they open above that, you know exactly something will go wrong today. In case I want to continue to be bullish, the strategies then you need to follow is, maybe you can take profits or some profits if you have been buying the market very low. Okay, for example, take 50% of those positions, keep profit, trail immediately your stop from stop loss to break even or a little bit higher to take the rest of the position. And we see now the market is building here more red volume bars. The difference between volume bars and candlesticks, other candlestick types you are using, is the typical, let's say this is a green candle, right? Means that the market has the closing price of yesterday, but the prices went through, came back down, and at the end of the day the market closed higher only during this period of time. It is 1 hourly, means, or the last hourly bar is green, means the price that has been traded during or among the last hourly bar has closed higher. And then you can compare that, for example, to 4-day hourly candle, and we see, yes, okay, the 4-day has been also 4 hour, I'm sorry, has been closing also higher. The daily also, but the weekly still red, because on the weekly we opened the market higher, and now because of the trend of the last days, the weekly close is lower. So that's the reason that the candle is red. Okay, so the typical candlesticks or Heikin-Ashi you are using is based on open price, high price, low price, and closing price of that period of time, right? So then we have here also some alerts, because I put some alerts on this yellow entry line. All right, so, and the volume candle just displays the volume, right? So is the bullish volume above a certain level, then the volume candles indicates the bulls are pushing the markets up, right? And if it's below a certain period of on the scale, it's indicating that or displays that the market has currently, let's say for example here 50%, right, and the volume decreases below that, the candle automatically in real time is becoming red, right? We are on 30-second chart. You see here, for example, now in this certain period, the volume currently is green, right? It doesn't say anything if the price is above the open price, below the the closing price of the last period, or something like that. It's just saying volume is coming in, right? And this volume is very, very important to us traders, because we are going to use it as a very important indicator, especially in day trading, to know where we should better be prepared to take our positions, where we should accumulate or distribute if we are bullish, and where we should be prepared to go short or also down, because volume always matters. It's a signal of the weakness or of the strength of the momentum, right? So we see here, for example, now in the meantime, so we got the alert. This was our entry here. The price went up, we had green bars, we didn't enter them, we're waiting that the EMA is becoming green again. Then we see now in the meanwhile also the RSI is green again, so that's indicating that possibly the market is going to reach again this level, right? So if you are short seller like me, then we better wait a little bit that the market is going up, and then if we have the right signal, and then we start to sell. If you are a bull, also for you, protect your capital. For example, I would then put my stop somewhere here. Then I will put my stop loss. Why? Again, because this low is valid, this low is valid, this low is valid, because we have been broken this level, right? So this is the current price, and the current price is above, right? Is above this broken highs, all right? So, and then we can wait a little bit. If the price is coming back below the last POC period, then we can take out immediately the trade. We know, oh, it was a fake out. This trade is not gonna work for a longer time and possibly drop down, right? So that way we don't wait until the price hits our stop loss, right? Instead, we are prepared now. We are in a trade. Let's say we are in a bullish trade. So we have been buying the position here, right? What's your job as a trader? To take profit? No way. Why? The first one is either the profit, the position is in profit. Our first, much more important work is to to manage the risk, the money management now. Now our job in this period, once we have taken a trade, is risk management only. We don't care how far the market is going or how deep it can fall. We just focus on our money and risk management only and only. Why? Because we are trading with the market. The market is giving us the signal. We take the signal and the market says, okay, now your job is to risk and being prepared. if I'm below a certain level, I give you the signal to take out your position, because maybe we go with losses here, we leave the market with losses here. If you don't do that, then sorry guy, but I need to hit your stop. Then means then we leave the market with bigger losses. Okay, so therefore question is, how high can it go? How deep can it fall? For a day trader is not relevant anymore. We let the market go, and we see here very well trend following is very, very meaningful in every time frame what you are walking around, right? It doesn't matter if it's 5 seconds, 1 minute, 1 day, weekly, yearly, monthly. Trend always matters. Trend always matters. A trend up is the price goes up, has ups and downs, meaning bulls and bears are present. So we go with the price, we buy. The price goes down, meaning bulls and bears are always present. Therefore we have ups and downs. We go short, and once we take an entry, a decision, our next decision is to limit the loss, right? And before doing that, so I told you in the last video at the beginning, we have to define if we go with the trend only, meaning if our EMAs are changing the color, then we go short. We can also use this entry plus changing color, then meaning then to us the trend up is over and now the market is coming down, okay? Or if we are working, we take profits, right? Like this one, for example, let's say the POCs rise that way, the market runs that way, and this we move just this yellow line to here, the market comes down, we take profit, right? We take profit, we wait until we have the same conditions again to a bull, the market goes up, meaning EMA, everything, our indicators all are green, we enter the market here, and then somewhere here we take profit. It can also happen that we immediately, like this one, for example, we go here, then we go here, the market comes down below the entry POC, we get down immediately, right? If we have, for example, entered here, we take the loss better here because happens that the market drops down, right? So our loss will be bigger, right? So, and this is the job of day trade of any trader, to protect its own capital. So that's the only job, right? The keyword, the golden key is having patience, and the golden key number 2 is protect your capital always. So if you try not to lose, or if lose, accept immediately that loss, because losses are our best friends in trading, right? Then I guarantee you will succeed that way, right? Which we take every confirmed entry, every signal to enter the market, to exit the market, to liquidate the position, to get out of the position, because then it seems that the trade is not working. As in one of my last videos I mentioned. Also, for example, a strategy of mine is, if a trade is not working during 2 or 3 days, I immediately take out that position. It doesn't matter I'm wrong or right, or losing or winning, because then based on that trading strategy, this trade will not or won't work, right? So, and we can use this trading system you see here also in bigger time frame. If you are, for example, midterm or long-term trade follower, of course we can work at the same time, right? Why? To give gains of 5,000 or even 10,000 points away, if you can take them, wait for a better entry on the previous direction of the trend and then to get in again. On that way we can accumulate the money, right? So we see here now, based on market structure, the market made low highs, then we come here. Now the market has some difficulties to go here, even we have some interest. It doesn't matter. Based on this concept of market structure, we see that this happening. The higher the market goes, the slowly it's going higher. The momentum is changing too fast, and the reason is again that we are at the day high period, so the general volume on higher time frames is going down, right? This is the reason. And as a seller, I wait a little bit to see if we have today, maybe before the close or maybe at the open of tomorrow, we have a good short signal, then we take then the next short to accumulate my short positions, and also to take some shorts for in the meantime, because I have two types of position, long-term, mid-term, and also in day trading niveau, meaning the market is giving us for 1 or 2 days good profit. We take that opportunity, then after the market turns, we take that profit, we add it to the account, right? So, and you can then combine it with your own trading strategy. You add this to your one, and we see here now how good this one is working. So the new period has been, this is live, right? The new period has been working. The POC has been shifting up. So we will now add or move this yellow line here. What does it mean to us? If we are, for example, long from here, the market is going up again, coming down below that, we immediately get out with that amount of profit, right? So, and this system can tell you when to limit your profit, when to limit your losses, when to trail your losses or stop loss, and most importantly, when to let the profits run, right? If we use some are using this, for example, they went here, they say, okay, I go here, then let's say I put my profit 2 to 1, something here, right? So, and they take the profits here, but the market moves here, right? If they would, for example, follow their own strategy, they would limit the profits, right? And I let the profits run, for example, like now, you see here, right? Because it can also go higher. Who knows? We don't know that. We never know that, right? So we can estimate or make projections or for shorter periods of time. But at this moment, it seems the market is going here. And if the market coming back here, we see then at the end, if we do follow that strategy, then we will have a higher percentage, right? Because then we trail also our stop. Then we have a profit or win reward to loss ratio of over 10 to 1 compared to 2 to 1, right? So if you learn this trading system, then you know exactly when to limit, to take profit at once, or when to let it run, right? That's a difference, right? But that way, the big guys are making money. They are not doing they are not doing anything else than you like or me, right? They exactly know the maneuver, their entries, exits, take profits, and much more better, take losses, right? That's the great strengths of those guys. They are not, we cannot say they are good at profit taking. They are extremely good, very good at taking losses, to cut losses, to limit losses, right? And that's because that's much more matters, right? Therefore, every prop trader, for example, they have daily loss limit. If they lose $1,000 or $2,000, some are jungling with bigger money, $1 million per day. If they hit that limit, it doesn't matter how far the market can go. They immediately stop trading. That's the reason they are successful over time. They are successful in longer period of time. They accumulate, generate wealth and money year after year, month after month, week after week, day after day. And sometimes they have also losses, but they cut their losses short. They cut their losses very, very small. Now, some minutes together, we can see what the market is doing. So if the market comes back, which point? So it doesn't change anything. So you see now we are at 69,000. And now we see at certain levels we have immediate pullback of the bears here. That's indicating, oh, the bears are defending these 69 levels heavily, but the bulls are fighting against it, right? We see it's coming down again. So the volume bars are really, really good, working very fast, very accurate. Now we are waiting for the next period. If the next period, it doesn't matter where the next period is, and we need to wait where this POC is shifting at. It will be automatic, the sell of the positions, of the long positions, if you are coming out. And before I forgot, if you go to my TradingView page, you see here in the comments, I'm going now from now to add some very important data here, where the market opened at the opening, and also opening POC weekly, monthly, and then every some hours I'm going to update that. For example, yesterday we have seen that at 66,200 was the opening POC, and during the day that opening POC was shifted to 64,000. That's very important information for us, for day traders, and also those who are on trend following but using day trading at entry target, that if tomorrow or even today, I doubt today, but I can say maybe around 50% that we go to that. But tomorrow, if the data are very, very bad for Bitcoin and better for the US dollar, in minimum, we go back to 64 to that POC levels. Also, I will then calculate later the open POC of tomorrow, maybe in some hours, and also compare to the shifted POC of yesterday. So you can go then on my TradingView, you can read them, you can take a look of that, and then just to use the numbers for you to mark it maybe at your chart, and then you know, okay, this level could be very interesting if you are short. Also, if you want to go long, maybe that level could be interesting again for you, because then at that level we can expect very big broadening patterns, and also maybe possible good bullish entries, right? So as if you are a day trader. So let's see now how our hourly time frames are doing. The hourly still is green. The market has some difficulties to break 69,150 level, something like that, as we have seen. So we wait a little bit to see, and we want to see then how these EMIs are working good together, because each of them is working a potential support if the market is coming down. And then on bigger time frames, then we can use to see the level of the volume bars, and that indicates us, okay, the last fat bearish move, where has it been established, and that will be the major resistance to us. I hope you had a lot of fun today in trading, and again, thank you very much for the support, for your support, for the likes, comments, and also for your good and positive energy. Have a great day, have a good winning day, and also have a good winning day Friday.